Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of BTC, taking a look at what's been going on most recently and what I would expect to happen next. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Okay guys, let's jump right down into this one though. Bitcoin paired up with USDT on the hourly chart, and Binance is our data source. On this hourly chart you can kind of see all these kind of squiggly lines, I guess, for those who do not know, but this is Elliott wave theory. We're tracking a big ABC structured move to the downside where I think we've got a nested 5-wave structure emerging, or looking to actually complete more specifically. Now if any of this is alien to you, check out 𝗕𝗘𝗪𝗔𝗥𝗘.com, linked in the description below. I've put together a course on Elliott wave theory so you can kind of stay up to date with what is going on when it comes to Elliott wave theory, and you can follow along in the videos a little bit more clearly. So let's go ahead and dive down into this recent move down here. Okay, specifically this one, it does look like we had an ending diagonal structure to finish off our wave 3, this big wave 3 here, which is a 5th wave movement to the end side. To the downside there. Now we're looking at this kind of 4th wave retracement. So let's go ahead and bring this up into play. If wave 3 is here, then we're expecting our retracement to be 38.2%. Minimum is not really a good term. It's usually typically 38.2. So I'm going to go ahead and draw a horizontal line right on that line right there, and then delete the fibs. There we go. So we're expecting approximately 22,044. Okay, that's going to be the typical kind of area that you retrace into. Now up here there's a bit of a gap and a bit of a distance that's been left behind after a bit of a move to the downside. This is usually something that's called a fair value gap. Do expect price to kind of gravitate towards that a little bit. What I'm going to do is I'm going to just neaten up some of these yellow boxes. I don't want to get so many on here. This is a previous demand area that I think is going to turn into a resistance. So I'm going to leave that one, but I'm going to just kind of draw in this area just here. This is typically an area that we're going to retrace to. So although 38.2% is 22,044 approximately, I'm kind of say that we're probably going to actually move up more towards 22,080 through to about 22,460. That there would be a more in line with my expectations, but in there is an invalidation. We should not cross 22,353. Because we cannot have that a 5-wave structure with a 4th wave that overlaps with wave 1, one of the unbreakable rules of Elliott wave theory. So knowing that we have that, we should be a little bit cautious. We do have this local low over here as well at 22,292, so expect that maybe to be the resistances. So yeah, we'll see how this one plays out. It might be that actually we have to complete wave 5 before we go up into this fair value gap area. So again, we'll just leave that as is for now. Retracement wise on this hourly chart, we have kind of reached an overbought status, and we are ranging, so caution here because it could be a little bit volatile as we kind of look for finishing off this larger C wave structure to the downside here. So once we kind of have completed our 5th wave movement, I can expect a bigger retracement to the upside. This is a big 3-wave structure, as you can kind of see. I would expect us to have some kind of 3-wave structure upwards. Doesn't necessarily have to be that big, but you kind of get the idea. And then of course, if I zoom out even further, we can then argue that this is all going to be a big A, B, and C structure, taking us down into this range, which is 19,300 to 20,100, and you can kind of see it playing out there. It takes some time. It's not something that happens overnight, but you can kind of see how that would play out. Now, if I zoom back in on this hourly chart, you can kind of see that the expectation is a slight move up higher before we drop down. We do have an oversold hourly chart, an oversold 8-hour and an oversold 4-hour chart, but I would expect those to really come into play once we finish this 5th wave down lower. Now, if we are to kind of assume that we will reach that 38.2% retracement, 22,040 approximately, then our 5th wave target expectations on this will be right down here at about 21,090 to 21,300 approximately. That's subject to change depending on where wave 4 goes. the higher it goes, the lower the price tends to want to gravitate, right? Right now, if we take the existing high, then we're not going to do anywhere near that kind of damage, and we'll talk about 21,300 to 21,200, right? Right in that kind of zone. So for now, we'll leave it as that, and we'll see how that kind of plays out over the weekend. From our weekly chart, we can see big rejection on the 200 weekly EMA. We are overbought on the weekly chart, so yeah, we're looking for bigger retracements, potentially new lower lows. Not a guarantee, but I am targeting out the 18,626 according to the Wyckoff accumulation pattern, either pattern 1 or pattern 2. Both of them are targeting out the $18,500 range, and basically it's a secondary test of phase A over here that we're looking to just come back down and retest on. This also happens to be this area of consolidation right over here, so essentially all we're really doing is saying we want to see how price reacts into this range just on this side. If we lose that, then we potentially come down into new lower lows. If we find this as support, we might come up here, come back down, retest it, and then rally on up from there. Okay, so Wyckoff accumulation pattern still in play. The only way to basically make all of this void is to go up higher than our white line here, which is $25,211.32. Okay, so we'd have to go up higher than that to basically say that this is all invalid. It's not void. It's void. It's no longer something that we can follow. At least not as I've drawn it. We'd have to maybe look at maybe this area down here on this low side being actually the selling climax rather than the secondary test of phase B, and then we could redraw it and so forth if we really needed to, which I don't think so. Anyway, moving back into our hourly chart here, what we'll do is we'll actually bring this to the daily. We can see that obviously we tapped into this slightly higher range at 23,996 to 24,941. We got rejected. This is again an area of rejection from our August time period, August 2022. Happens to fall inside with the rejection of the 200 EMA from August 2022, and obviously rejection from the 200 weekly EMA as well here in January of 2023. So all of that kind of aligns quite nicely into that area of liquidity. This is where the sellers are. Looking at this entire move, we're not a 5-wave structure. We're not 1, 2, 3, 4, and 5. That's not a thing. Instead, this is a 3, 3, 5. We do not meet the requirements of a diagonal at the beginning. So instead, we're 1, 2, 3, 4, and 5, like so. And it's actually a 3, 3, 5, and that is that. Meaning that basically it's fair play at this point to think about new lower lows, of which, 12 to 13.5, maybe even slightly higher at 14 if we really wanted to be safe about it. It seems to be the most probable. The next pullback to the downside, though, I think is the last one. And the reason I say this is that from an Elliott Wave theory point of view, I cannot see any other kind of structures that would justify any further. So for example, we could come down here, we could rally up, but I can't see a requirement to do that, right? We can't come down into a new lower low after this next lower low, if that makes sense, if we do it at all, of course. So looking at it, I think the next kind of move to the downside is a dollar cost averaging opportunity. It seems to be end of structure kind of load up kind of vibes. That's kind of what I'm looking at it at the moment, and see how that kind of changes over time. But for the most part, I think whatever the next pullback is kind of the one that we want to be involved in. I do fear that a lot of retail is probably likely to sell, and this is usually on the back of the fact that they've been accumulating during the entire bear market so far, and well, debts are mounting. Times are getting harder and tougher as more and more jobs are getting cut. And the US side of things and their data is, I believe, not 100% as clean and as accurate as you would like it to be, but maybe just terminology being thrown around and changed and chopped up to kind of make things seem like they're okay, right? You see unemployment rates not crashing down, right? Or unemployment rate is dropping, I should say, but in people being unemployed essentially is being masqueraded or kind of covered up through data that's not being as transparent as I would like it to be personally, such as part-time jobs being made more apparent. There's a decrease in full-time, but an increase in part-time. That's great, but essentially people are still worse off, right? There's companies not paying as much for those employees anymore, right? The cuts are being made essentially, and people are going to struggle a lot more. We see this in other data outside of unemployment and inflation rates, but we also see that debt is on the increase, whilst savings accounts are on the decrease. And so it's just a matter of time for retail investors to sell other assets to maintain their I guess, lifestyles as kind of how they have been living. So I think people are going to start feeling a lot poorer a lot sooner, or starting to catch up with them a little bit as we kind of get into 2023 a little bit more detail. So caution is kind of the word here. I expect kind of, the markets to get rocked. We see lots of things going on with the SEC over in the US, and in terms of a Bitcoin here, I think the market's fragile. So just be really, really cautious. I still expect, relief rallies and all that kind of stuff. Nothing moves in straight lines. It's still possible that we can even tap on the 25K. Even at this point here, it's still possible that we can do that. But just be really cautious. Essentially, I think this is all artificial. There isn't a huge amount of demand being behind the movements. We can check that by taking a look at the volume profiles. If we just come up to the weekly to make it a little bit easier, you can see that during this move to the upside, volume has been decreasing, right? There's not a lot of volume coming in here. Volumes were higher during November. And in fact, volumes were still higher even in September of 2022. They were higher in pretty much most of September, if not all of September. And so, volume decreasing the way that it is and the price going up higher, these things are not natural. And you can just take a look at the DXY, take a look at the Forex traders and what they're doing to truly get an understanding as to kind of what is going on there. So just a word of warning, I'm not a financial advisor. I can't give financial advice. All I can do is give you my thoughts and opinions on the data and the charts as I see it. And at the moment, I see potential retracements here for BTC and the altcoin market. I'm going to leave them there. Let me know your thoughts in the comments down below. And if you have found it useful and informative, smash that like button. If you're new, subscribe, and I'll catch you all in the next one.